Callum, what were the big standout numbers in today's national accounts?
Overall, it was a pretty, I guess, softish type result, up 0.5, which was slightly stronger than expectations. It was mainly driven by inventories, which isn't always a good thing. I mean, it usually means that there's soft demand conditions in the broader economy. But we did see a pick-up in residential investment, and that was largely as expected, but it's still good to see because it shows that the economy is rebalancing somewhat due to low interest rates.
Now, in terms of those inventories going up, couldn't that be a sign that firms are thinking, okay, we're looking at a better economy down the track, so therefore I'm going to start building up my inventories now?
That's one interpretation. Another potential reason, though, is that exports were much weaker than anticipated during the quarter, and so firms were producing goods which then they couldn't sell on.
Okay, so let's talk about the residential construction. That's a big increase of 2.5% for the quarter.
Yep.
So annualised, that's 10% increase. I mean, that's a sign of this housing boom being fueled by low rates and big demand from investors. Is that right?
Yeah, that's correct. But we need to put it in perspective. It's still only a very small share of the economy. It's around 3.2% of real GDP. So even if we do see sort of double-digit increases for a couple of years, it's still only going to increase perhaps 1 percentage point of GDP, which is not that much. Still, it's good to see.
Now, what about the consumer? What do we see in terms of the consumption figures?
So consumption was up 0.5%, which was a little bit stronger than expectations. Retail trade volumes were down 0.2% in the quarter. So there's a pretty big contribution from the services sector. But one thing worth bearing in mind, I think, is that consumption per capita has been largely flat for a long time. Consumption's increasing, but it's doing so because of population growth as opposed to strong income growth and higher demand.
That's interesting. And I suppose too, as we're finding a population bulge ageing, they begin to consume less and less as they leave the workforce.
Yeah, that's certainly one of the risks for the retail sector and one of the big challenges that's going to come up over the next 5, 10, 20 years because the composition of what we consume is going to change quite significantly.
Now, what do these numbers say in context of the RBA's decision on rates yesterday?
Well, the result was broadly in line with the expectations, and so I don't think it won't have any effect on what the RBA does next month or the month after that. It seems almost certain that they'll keep rates unchanged for the rest of this year. They'll certainly want to have a bit more information on mining investment. They'll certainly be following developments in China quite closely, but I certainly don't expect them to do anything this year.
But an annualised growth rate of 3.1% really is not too bad, right?
It's not too bad, but we do know that there's going to be a number of challenges over the next couple of years. We know that mining investment's going to collapse, and the CapEx survey indicated that it should decline by around 10% over the next year. So that's going to create a sizable hole that other sectors of the economy have to fill. So we're going to be relying on exports, we're going to be relying on consumption and residential investment to fill that gap. And as a result, I mean, it's widely expected that growth will slow significantly over the next year, probably around to sort of 2.25% to 2.5%.
Callum Pickering, thanks very much.
Thank you.